Today's latest jobs report is proof again of a labor market that has been resilient and often stronger than expected. That was part of President Biden's message during his State of the Union last night as well. But many Americans don't feel the economy is strong overall or helping them or their families. A number of polls have shown this, including one from the New York Times this week that found 51% of Americans believe the country's economic conditions are poor right now. So why the disconnect? Economics correspondent Paul Solman explains.
I think if you talk to average person on the street, they're going to say that the economy is not doing well, and I tend to agree.
Seth Reed is an ESL teacher in Northern Virginia.
I'm doing fine, but still, living paycheck to paycheck.
How many bikes do you have on the docket today?
Alyssa Gonzalez co-owns the Treehouse Cyclery in Denver.
I've kind of accepted more of like a realistic view of the world where things aren't going to get better.
Nonprofit executive Eric Hicks was the most succinct.
I don't feel great.
But how can people feel so bad and even tell pollsters just that if the economy has been doing so well? Low unemployment, inflation easing.
I publish these social media videos every day, TikTok, Instagram Reels, YouTube Shorts. And what was interesting—
Kyla Scanlon is a writer, social media personality, and demystifier of economics.
I was getting like hundreds of comments a day telling me how people were perceiving the economy. Because I would make a video being like, inflation is going down, like the labor market's okay. And people were like, no, I feel really bad.
The word she coined to describe what she was hearing, vibe-session.
The vibe session is this idea of a disconnect between consumer sentiment and economic data, and why people feel bad about the economy despite the economic metrics telling them that the economy is doing okay.
In fact, the Consumer Sentiment Index has noticeably improved, says economist Justin Wolfers.
People seem to be a little bit more willing to admit that, in fact, that long nightmare of the post-pandemic recession and hard times and recovery is behind us, and people seem a little more willing to admit that things are doing okay.
But many Americans say they remain unhappy with the economy. Why the disconnect? Well, the key reason for a lot of people, prices are still higher than they were pre-COVID. Seth Reed used to shop at Safeway right next to his apartment. Now he drives to Aldi for less expensive groceries.
Everything's going up in price.
But lower inflation doesn't mean lower prices. It just means prices are rising more slowly than they were, Scanlon explains.
If you're thinking that inflation going down means that prices are going down, you're going to be very confused when you go to the store and your box of cereal is not cheaper. You're like, but I heard on the media that inflation is going down. What's going on?
Well, cereal prices barely budged this past year, but they rose by more than 25% during the pandemic and still aren't back to where they were pre-COVID. Same for eggs, which nearly tripled, but at today's average of $2.50 a dozen, still almost double what they were pre-COVID. Alyssa Gonzalez now looks for cheaper items.
A lot more canned foods, boxed foods, just like 12-pack of ramen noodles because it gets the job done.
And food manufacturers themselves have pushed prices higher than their costs, says Scanlon.
Firms are out there just raising prices, and they're telling you that in their earnings reports. They're like, yeah, we're going to expand our profits.
This is so-called greedflation. Firms taking advantage of consumer expectations that prices will keep going up. And why wouldn't they?
Like, well, duh, they're going to do that. Like, they're companies. That's their goal, is to make a bunch of money.
And then there's shrinkflation. Firms charging the same for what turns out to be a lesser quantity. Here are recent examples flagged by the website Consumer World.
You're getting less and you're paying more. The little divot at the bottom of sauce containers is becoming more, so you're getting less sauce. And it's kind of ridiculous, to be honest.
There's one group especially sensitive to food prices, the least well off, who spend more of their budget on food.
They're not able to make ends meet.
Eric Hicks runs a Denver area food bank.
The community and the members who are coming to access services aren't able to pay for the rising prices in groceries and food and other resources.
And get this, cheaper food went up at twice the rate of premium foods during the pandemic. But to Scanlon, the real killer is housing. House prices have gone up, mortgage rates, and people's rents.
And so when you tell them that things are getting cheaper, but their rent is not, getting cheaper and their food is not getting cheaper, of course they're going to feel bad.
It feels a little daunting to know that I'll be renting for a while and renting prices going up so much every year.
For Alyssa Gonzalez, home ownership is out of the question.
I don't believe that I will be able to buy a house. It's something that I kind of just accepted.
So many face additional financial stressors, with the end of COVID checks and the higher cost of borrowing, and then there's the renewal of student debt payments. Gonzalez has over $100,000 worth.
If I factored that into, my normal bills of close to $2,000 a month for just rent, and then groceries and all the other things, then it's just not feasible.
Not feasible for Gonzalez to pay back her student loans.
It sucks because I'm not going to ever be able to pay off that debt, and it's one of the things that impacts me with my credit and being a business owner and just being able to apply for loans and get cars or anything like that. And so it kind of feels unsolvable, but it's so big of a problem that there's nothing I feel like I can do about it.
Even yuppies feel worse than they did during COVID.
The yuppie lifestyle subsidy was in full force. Ubers were cheap, Airbnbs were cheap, food delivery apps were cheap.
But not anymore. So Brett Mead's fellow yuppies feel relatively worse off.
I think they feel negative about the economy, in part because their cost of living has gone up.
But economist Wolfers thinks something else is driving the pessimism, reflected in some polls.
The way that people answer these public opinion poll questions has fundamentally changed. What they tend to do, instead of saying, well, here's the newspaper articles I read and here's what I see around me, they think, is my team winning right now? My team being Republicans or Democrats? Those who lean Republican reliably now were more optimistic under Trump and incredibly pessimistic under Biden, and Democrats are the opposite. What I think that tells us is less about the reality of the economy and more about how partisan and polarized views have become.
Even so, the economic reality for Seth Reed, at least, compared to that of his parents at his age, is kind of a bummer.
They had a house, they had 2 cars, they had stable incomes. They were definitely much more stable than I feel. Rising costs of childcare are the #1 reason why my fiance and I haven't even thought about having kids in the near future.
So maybe it should come as no surprise. A statistically good economy for many, but for more than a few Americans, a bad economic vibe. For the PBS NewsHour, Paul Solman.